Bitcoin and the other major cryptocurrencies have been absolutely clobbered over the past 24 hours. Why? And what does this suggest for the larger stock market? To find out, keep watching. Prices have suddenly collapsed across the cryptoverse, with many of the largest cryptocurrencies down 20 to 35% since yesterday at the time of this recording. Nearly $1 trillion worth of crypto market value has vaporized since its all-time peak, which for the record was only just last week. In this quick video, we'll dig into what's happening, why it's happening, and what may happen next from here. If you haven't been glued to your screen like I've been, here's what's gone down over the past few days. Last Wednesday, world's richest man and supposed champion of crypto, Elon Musk, shocked everyone with a surprise announcement that Tesla will not accept Bitcoin as payment. Yes, this is the same Elon Musk who proudly defended Tesla's purchase of over $1.5 billion worth of Bitcoin just back in February. Now, Musk cited Bitcoin's high energy consumption and its impact on the climate as a chief concern. Bitcoin, which was trading around $55,000 before the announcement, immediately fell 10% on the news, and fresh debate erupted over Bitcoin's viability as a wide-scale form of currency. As that debate raged, Bitcoin's price drifted lower into the upper 40,000s over the following days. And then this weekend, Musk created another stir when he engaged in a Twitter fight with several prominent crypto personalities and seemed to imply that Tesla was considering selling its massive Bitcoin stake, or may have already sold it. Now that caused Bitcoin's price to drop further, now down into the mid 40,000s. Even though Musk issued a subsequent tweet clarifying that Tesla still held and expected to hold its position, that had little effect. And then, late last night, US time, Reuters reported that China has banned payment companies and financial institutions from engaging in cryptocurrency transactions. It declared cryptocurrency as, quote, seriously infringing on the safety of people's property and disrupting the normal economic and financial order. And it has warned investors against speculating in the cryptocurrencies. Well, after this report, the entire crypto complex started crashing. All the major cryptos were sucked down in the carnage. Bitcoin fell from 43,000 to as low as 31,000 this morning. It's bounced off of support since then and is now trading around 37,000 at the time of this recording. Now, for context, it's now back to where it was trading in early February, right before Tesla's announcement of its $1.5 billion stake, which subsequently drove the price up to a high of 64,000. So it's now currently trading 43% lower than that peak that it hit just a month ago. Well, what is the sudden drop in Bitcoin and the crypto complex telling us? Well, it's suggesting that market sentiment may be in the process of shifting from risk on to risk off. You see, when a speculative mania ends, the most speculative assets are the ones that are at greatest risk of correcting first. Then the next most speculative asset class starts falling, and then the contagion spreads farther and farther along from that. Think of it like dominoes. The fall of the first one can set off a cascade reaction. So looking at the assets that have received the most speculation in 2021, cryptos, SPACs, meme stocks like GameStop, and story stocks like Tesla, we're seeing signs of cooling off that may indicate investor sentiment is indeed switching from rapid speculative pursuit of gains now towards safety instead. We've already talked about the weakness that we're seeing in cryptos, but let's look at SPACs. So the SPAC boom is drying up, and the performance of most of these SPAC offerings this year has been quite disappointing for those that invested in them. Meme stocks like GameStop are cooling off, as are the high-flying tech stocks that have powered the NASDAQ and the S&P indices higher since last year's short-lived market dip. For example, Tesla is now down in the mid-500s, which is a far cry from its January high near $900 a share. Adding additional support to the change in sentiment thesis is this article today from Yahoo Finance that suggests that big money investors think the current market cycle has peaked, with growth, earnings, and risk appetite all having cooled since last month. This chart from the article shows that risk appetite did indeed peak in April and is now beginning to abate, though it still has a lot further to fall until it gets to neutral. So what would we expect to see here if risk-off sentiment continues to grow? Well, we'd expect to see a further decline in the prices of the most speculative assets. Think Dogecoin and NFT art, as well as the cryptocurrencies and meme stocks in general. We'd expect to see lower stock prices, and we've seen a little weakness actually in the major indices like the S&P and the NASDAQ over the past week and a half. It's not a lot yet, but it merits watching. And we'd expect higher demand for safe haven assets like gold and US Treasuries. And looking at gold, it's indeed showing strength, trading up today at nearly $1,900 an ounce. More interestingly, the gold-Bitcoin ratio is trending higher for the first time in nearly a year. This may be a sign that capital is now starting to leave the crypto space for the precious metal. It will be interesting to see what happens from here. While I've been recording this video, Elon Musk tweeted out, "Tesla has diamond hands," sending the price of Bitcoin back above 40,000 briefly, though it's settled back now to around 37,000, 38,000 now. This situation remains extremely volatile, and while anything can happen, we'll be keeping our eye closely on this to see if an overall trend toward risk-off is indeed building momentum. As we've long said, this is a really challenging time for investors who are looking to preserve and prudently grow their wealth. FOMO, or fear of missing out, has driven so much of the meteoric rise of the cryptos and other assets over the past several months. If that suddenly is disappearing, as you'd expect at the end of the mania, we should anticipate more gut-wrenching volatility like we're seeing in the cryptos right now, but possibly spreading out over into the general stock market. Whatever happens, we'll be tracking it for you here on this YouTube channel. If you're a new viewer, please take a second and subscribe to it by clicking on the red subscribe button below, as well as the little bell icon right next to it. And if the recent uncertainty creeping into the markets has you growing concerned about protecting your wealth, consider scheduling a free, no-strings-attached consultation with Wealthion's endorsed financial advisor. To learn how to do that, just stick around to the end of the video, which is coming up in 10 seconds. Thanks for watching, and be sure to join us on Friday for our upcoming interview with mining stock analyst Rick Rule. Thanks for watching. If you'd like to schedule a consultation with one of the financial advisors at New Harbor Financial, simply go to Wealthion.com. These consultations are completely free, and there are no strings attached. The good folks at New Harbor will simply answer any questions you have about your investment goals or your portfolio and give you their best advice given their latest market outlook. They're willing to do this because they care about protecting people's wealth, and because Wealthion has connected them with so many thoughtful investors just like you over the past decade. We started doing this because so many people have approached us in frustration, looking for a solution because they're feeling out of alignment or downright ridiculed by the standard financial advisors who have been managing their money. You know the type. The kind that just pushes all of your money into the market, scoffs at the idea of owning gold, and when you bring up concerns about the market's sky-high valuations, they say, "Don't worry, the market will always take care of you." For many of the reasons discussed in today's video, we think this is one of the most challenging and treacherous times in history for investing. We strongly believe that today's investors are best served working in partnership with a conscientious professional financial advisor who understands the risks in play. Now, we're agnostic which professional advisor you work with, as long as they're good. If you're already working with one, that's fantastic. Stick with them. But if you don't, or are having trouble finding one you respect or trust, then consider talking to John and Mike and the team at New Harbor. Now, for those about to ask, yes, there's a business relationship between Wealthion and New Harbor, which we've put in place to make sure everything is handled according to SEC regulations. All the details on this are clearly provided on the Wealthion.com website. Also, it's important to note that New Harbor is able to work with U.S. citizens, green card holders, and those with existing assets in the USA. But for regulatory reasons, they aren't able to take on non-U.S. clients. All right, with all that said, if you'd like some insight and guidance on how to protect your wealth during this unprecedented time in the markets, go to Wealthion.com to schedule your free consultation with the good folks at New Harbor. Thanks for watching.